Did you know that star investor Cathie Wood just dropped a huge update about Tesla Q3 plans? According to experts, Tesla has a long yet bright path ahead of it. Most of them are convinced that Tesla is doing its part to maintain the leading position in the EV industry. Make sure to stay tuned and keep watching to know more about Tesla's plans. Although plans do not always go through perfectly, given that there are almost always unforeseen factors that affect said plans, businesses have to make sure that they have to adhere to plans as much as they possibly could. That said, large corporations, including Tesla, devise plans cautiously and see that they are followed through effectively. In today's video, you will see Cathie Wood drop this huge update about Tesla Q3 plans. According to some, Tesla might be on track for its best quarter in Q3, with June 2022 having the highest vehicle production month in Tesla's history. In the first 3 months of 2022, Tesla produced over 305,000 vehicles and delivered over 310,000 vehicles. In contrast, in Q2, the company produced over 258,000 vehicles and delivered over 254,000 vehicles. Tesla blamed the decline in production and delivery on setbacks from its factory shutdown in Shanghai. However, despite the setbacks, June 2022 was the highest vehicle production month in Tesla's history, the company said. Although the EV company didn't mention the number of vehicles produced in June, it is estimated to be around the 120,000 mark. If Tesla keeps the production number this high, it can easily achieve its best quarter in regards to production in Q3, with its Berlin and Austin factories carrying the most weight. Cathie Wood's bullishness on Tesla is a well-established fact by now. Wood, who manages ARK Invest funds such as the ARK Innovation ETF, has Tesla among her top holdings. Terms such as disruptive innovation and convergence always seem to pop up when discussing the investing rationale behind Cathie Wood's hugely successful ARK Invest Asset Management Fund, and these terms are arguably related to Tesla. In fact, Cathie Wood-led ARK Invest has a lot of faith in Elon Musk's Tesla venture, so much so that the stock represents a whole 10% of the fund's capitalization, which is not much of a surprise. Tesla ticks a lot of the boxes when it comes to Cathie Wood's investment philosophy. Indeed, it was Cathie's intervention by way of an open letter to Elon Musk back in 2018 that prevented Musk from reacquiring Tesla stock allocation and taking the company private again. The letter turned out to be a phenomenon of sorts. In it, Cathie Wood outlined a 5-year bull thesis for Tesla stock, pitching its price in 2023 as high as $4,000. Musk at the time was happy to pay just $420 for every share in his nascent stock repurchase scheme. If you look at the revenue growth the last 5 years, it's compounded at roughly 48% per year, and that was, as you recall, when Tesla was experiencing quite a bit of controversy. Our forecast for the next 10 years is in the 50 to 60% range, depends if you take our bull or bear case, and there are a few reasons, says Cathie Wood. On a different note, Tesla plans to start production of 4680 format battery cells at the Texas Gigafactory this quarter, and to surpass the capacity of the Cato pilot line there near the car factory in Fremont, California by the end of the year. This was explained by Tesla manager Drew Baglino during the analyst conference on the latest quarterly figures. Currently, the production of 4680 cells on the pilot line is not yet sufficient for 1,000 vehicles per week. The challenge is still to get the production process for the new technologies, including the dry electrodes, under control. That said, Tesla cements its plans to begin 4680 cell production in Q3. Specifically for Texas, the cell equipment was fully installed and commissioned last quarter, and we produced our first test vehicles with Texas cells by the end of the line. Baglino said, "Our goal for Texas is to start production this quarter, and Texas should be able to surpass Cato's weekly production before the end of this year." Cato is Tesla's current pilot line in Fremont, located on Cato Road. This facility is often referred to as Terra. At the recent opened Giga Texas, Tesla is building a standard range version of the Model Y, which is only available in North America with the 4680 cells and structural battery packs. However, the Model Y long range, which is now also built there, probably still uses conventional battery packs with the smaller 2170 cells. According to Tesla, it is not dependent on the 4680 production progress in California and Texas. Elon Musk explained that Tesla has enough cells of the 2170 format to cover the entire vehicle production for the rest of the year. He stressed that the 4680 cells will become important in 2023, not yet this year. Moreover, Tesla's perspective is not to rely only on its own 4680 productions. Cell partner Panasonic sent the first 4680 sample cells to Tesla and started its own pilot production in Japan in May. Last week it became known that the battery factory for series production will probably be built in Kansas. Samsung SDI is building its 4680 pilot line in Chennai, with series production reportedly to take place later in Malaysia. What are your thoughts about Tesla in the near future? Let us know in the comments section below. Also, make sure to hit the like and subscribe buttons for more of this content. With the third quarter more than half over, Tesla investors have more visibility into how the electric car makers' deliveries might be faring. However, any forecast at this time should still bake in plenty of conservatism. Uncertainty remains particularly elevated in China, where Tesla's highest output factory is located. It can be noted that operational restrictions ordered by the government in line with its zero COVID policy earlier this year were the main detractor from production rates for Tesla. Now, power shortage challenges amid a heat wave are threatening manufacturers' operations and potentially disrupting the company's supply chain. However, investors can still do their best to estimate a ballpark range of where deliveries could come in for the quarter, despite the continued uncertainty Tesla is facing. More importantly, a close look at Tesla's business still provides a good picture of the company's growth outlook in Q3 and beyond, despite current challenges. Although it's difficult to predict exactly where Tesla's quarterly deliveries could fall in Q3, one thing is almost certain: strong year-over-year growth is likely. Note that Tesla's second quarter global deliveries grew 27% year-over-year, and that included either a temporary shutdown or limited operating capacity at Tesla's high-output factory in Shanghai during the majority of the quarter. Tesla's ability to grow global production this fast, even with these constraints, speaks to the company's momentum. Tesla also said it wrapped up Q2 with record monthly production levels at its Shanghai factory. That said, even though potential power limitations are a threat to Tesla's manufacturing rates during the remainder of the quarter, it's likely that the automaker has already built a significant number of vehicles at the factory. More than that, management seemed optimistic during Tesla's second quarter earnings call about Tesla's potential production growth in the second half of 2022. The four barriers to entry that seem to have gotten higher in Tesla's favor, according to Cathie Wood, are also worth mentioning. The first is battery technology. Wood said that Tesla is the only car manufacturer, except for a few in China, that decided to ride down the cost curve of the consumer electronics industry. This is due to the change in batteries that are used in laptops and/or cell phones. Because of that, though, its cost is lower. Today, the cost of its battery pack system is significantly lower than that of other auto manufacturers. Wood said that if they want to compete with Tesla, those other automakers are going to lose money in electric vehicles while their gas-powered vehicles will fall. The other barrier to entry is the artificial intelligence chip, which is all about autonomous, and Tesla is the only one doing this. Wood said that when their analyst James Wang, who worked at NVIDIA, an artificial intelligence company, for 8 years looked at the specs of Tesla's chip, he was in awe. Wang said that Tesla is 4 years ahead of any other auto manufacturer in terms of the specs out there on chip technology. The next barrier to entry is that Tesla has billions upon billions of miles of real-world driving data accumulated. According to Tesla's then AI director Andrej Karpathy, they have more corner cases to train their systems on than any other company. Wood said that it is not going to be possible for other rival companies to catch up, because Tesla already has more than 1 million robots, including her Model 3, roaming around collecting data and sending it back every day. Another barrier to entry, according to Cathie Wood, is over-the-air software updates, which come as a surprise for her. Wood shared that she got her Model 3 in 2018 and that she had never had to take it in for a problem. Tesla is a disruptor in the transportation space, straight out of Cathie Wood's playbook. ARC seeks out innovators and those changing the landscape in their respective fields. Tesla might not be the only EV firm in town. In fact, there is a lot of competition from seemingly everywhere, but it is the one leading the pack and the one dictating the pace for its rivals in the race. For more Tesla stock content, visit our channel and watch our other videos.